We're going to talk about what happened this year, 2023, very happening year for real estate, and then also we want to talk about some stuff that will probably affect us in 2024. And more importantly, this is something very close to my heart. I want to talk about investing in real estate for 2024. Welcome to the second podcast with me and Edison. We had a lot of fun the first time around, so we figured we want to do another one. And we're going to talk about what happened this year, 2023, very happening year for real estate, and then also we want to talk about some stuff that will probably affect us in 2024. And more importantly, this is something very close to my heart. I want to talk about investing in real estate for 2024. And who better than to ask Edison over here. Edison's a major celebrity in my opinion from where I'm standing on TikTok. He's got a lot of experience and was able to invite him back again. So yeah, looking forward to our little chit chat.
Yeah, I think the pleasure is all mine because of this setup over here, right? This is a dream for a lot of us. Yeah.
It's my front porch.
Not many people have front porches in Singapore, FYI.
I was fortunate, yes.
Yeah, right. Yeah, so I think it's a pleasure here, and to exchange ideas, right? Yeah, I learned a lot from you as well, and that's where we propagate our seeds and ideas into the YouTube and the TikTok realms, right? Yeah.
Okay. All right. Let's talk about our first topic that we had. Plan, and that was review in 2023. It's a very broad review, but in a couple of paragraphs. So what do you think of the real estate market? How was it like in 2023? What are some of the highs and some of the lows?
2023, if I could summarize it or sum it up in a couple of sentences, I would say the COVID surge has ended. COVID surge, they brought a lot of the rents up, it brought a lot of the prices up because of the FOMO effect, right? If I don't buy now, what happens? Now I have no place to stay, I need to stay in Singapore to keep my job. A lot of Malaysians, right, were stuck in Singapore during COVID, drove the demand up the roof, off the roof, and charts and everything all broken. So a lot of landlords took this opportunity to jack up their rents, and it worked for a couple of years. And we already know at the end of 2023, it's no longer sustainable. Yeah, so I can say that rents for now is going to stay low or muted for a good while.
It didn't drop. It didn't drop. Per se the last. By a significant amount. It didn't take a dive.
Yeah.
There was some. It reached some kind of normalcy.
Yeah.
So it didn't go up like every month 2 to 3%. So by the end of the year, you get 30% increase, in rent, and it's like every week, every time you put a place for rent out, you get like 50 applicants in, and that was just nuts. Yep. This year saw a bit of normalcy to that, but we're gonna circle and come back around to that. I have a different view of where the rents are going to be next year.
Okay.
But what else about 2023?
To add on to rents, right? If you take stock of an actual example, you go to Property Guru and you search Normanton Park. How many listings for rent are still there? The last I checked, last week or 2 weeks ago, because I was on vacation. 2 weeks ago, I checked. Normanton Park had 1,000 over listings for rent.
Wow.
One project, 1,000 over listings. Of course, they can be duplicates. 2 or 3 agents marketing one unit. If you look at the Hougang area, District 19, you have Florence Residences, TOP already, all collecting keys. You have Riverfront already collected keys for 6 months. What else? You have Affinity, a triangle of 3,000 over units.
Tampines Treasure as well.
Exactly. Tampines Treasure 2,000 over 2,200. How to find tenant? Yeah, a lot of them are now having difficulties. Yes.
I agree with you.
So this is I think one of the closing points for 2023.
2023, my personal condo unit came out for rent. The previous rent was $3,000 a month. It was a 2 beds, 2 baths, 800 square feet. Freehold condo, but it's a fairly old one in District 9. and I had rented it out previously no more than 3001, 3002 to 3003. So this year, understanding that there were a lot of units out in the market, I didn't like, oh, I want to break the rental numbers again. The guys upstairs, had the rent was trying to, they were trying to rent their unit out for 5,005. Very, very, very big number.
Ambitious.
Very, very ambitious. So it's still, and because I know that there's a lot of units out there, I said, no, I'd rather rent it out now as opposed to wait later on and then have it sit empty for a couple of months. So I said 4,003. And so 4,005, and then somebody came in and says, I'll rent it up for 4,003. So for me, it was a huge bump. It was a huge jump in rent from 3,000 to 4,003. But even though the upstairs they were asking for 5,005, I didn't care. I much rather rent it at a lower rate, but way higher than where I was, before, than to sit around empty for a while. So this year, one of the biggest problems was that a lot of projects caught up and they were able to get TOP this year and a lot of units out. But here comes a very interesting number for next year. We know that one of the major reasons of COVID was in 2024 there will be a lot less projects that were TOP, and the reason for that is really quite simple. If in order to collect your keys in 2024, you have to work 3 years backwards. Basically, when developers, they come in, they want to build a place, they need 3 to 4 years to build a place. So let's just say 2024, in order to build and have keys available, you need to work back to 2020, 2021. And 2020 and 2021, we know that very, very little land was released, simply because we were smack in the middle of COVID. And most of the foreign laborers were sitting in their dorm rooms. Everybody, was like, basically couldn't work. The whole economy was up to, down to standstill. This is probably going to affect the next 2 years. 2024, 2025, a lot less keys. And the $64 million question here is this: where do you think rents are going to be in the next 2 years? You think they're going to be stable, or are they going to slowly climb up?
In the next 1 or 2 years, I would say the prices, like I said, demand is now very low, but then it will slowly recover. They are going very, very slowly. I would say that it's temporary, but the drop in demand is very obvious. It's very obvious.
I don't think it's so much the drop in demand. I think it's a drop in, it's the increase in supply.
Yeah, okay. Maybe you're right. Yeah, maybe it's the increase in
Momentum, 1,000 over year, or maybe at least a couple of hundred units come on the market. 2 years ago, there was no such thing.
Correct.
There were, very few, any units that went on the market, bam, you get 50 calls within the first 24 hours. It was insane. It was like, everybody was begging to want to rent that place. And right now it's like, huh? What happened to all these people? But knowing that, because we also know numbers from the past 1 year, the Singapore's population grew by an extra 5%. That's a huge jump in 1 year, 5%. So we know that 360,000 foreigners came in, and these people came in for various reasons, to work and et cetera, et cetera. Obviously, when they come in, they need to stay somewhere. They need to live somewhere. So the question here is this: was 2023 a case of too much demand or too much supply?
Yeah, you're right. The bumper crop of TOP projects, right, came up was just insane, crazy.
Right?
Yeah, it's just insane. I think it will soften. It will soften, but as you can see, recent news has said that a lot of new increase in supply is coming up soon in the first half of next year. URA has just released their list, right, of the
GLS land.
Yeah, GLS land.
But not TOP. So to continue, 2023 prices there went up still, as usual. We saw land prices go up as well. We saw Jayden, holy crap, Jurong East, average price 2,400, 90% sold. it's very hard to wrap my head around that. Jurong, 2,400 sold. And the biggest and the highest transacted for that was 2,800. 90%, so 2,800 in Jurong per square foot. Holy crap.
So hard to believe, right? And
It's very hard to wrap my head around that number.
yeah, lor, exactly. So Jayden versus the reserve. If it was you, you only had a choice. Jayden or reserve. About the same price, ma.
Yeah.
Which one would you buy?
It's a toss-up for me. I maybe this is a good way to get my Ding Tai Fung.
Like, this is unalterated opinions, right? Yeah. We choose one over the other without saying the other is bad, right? We say, okay, we say one is better than the other, but we don't say which is worse.
My biggest problem with reserve is because it's right beside PIE. It's literally you reach out, you can touch PIE from there, and that doesn't sit so well with me. But in terms of location, obviously, reserve is much better. I mean, Jayden's got a good thing coming. We're going to see a huge transformation in the Jurong area. But as far as the potential growth for that, I think it's going to be possibly the next Pongo in the next 10 years. So return on capital that would probably slightly age a little bit in front, but 2,800 for Jurong. It's very hard for me to wrap my head around that. Yeah. Reserve residence, if you go like 2004, I can still wrap my head around that because it's right in front of, it's like a sunset area where all the landed is, and it's you got so many good schools all around. You got Hwa Chong, you got National, you got right in front. I believe it's Ngee Ann Poly. So all these are that is easy. That's easy for me to convince myself for reserve. But Jurong, oh my goodness, it took me. I was very surprised. 90%. I was very, very surprised. 90% sold on the first weekend, and at a whopping price. It was. I don't know. Yeah. It was very hard for me to decide. But reserve, it was just because it's so near to the PIE. So I'm like, okay. Yeah. As long as you don't get a stack that's facing that, you face the other side, then you're fine. It came out in 2023 as well, as far as condo prices are concerned, or as long as real estate prices. We saw landed come down in 2023. Is this trend going to continue? What was the main reason? What do you think landed prices the prices coming down for the reason?
If you ask me, my personal opinion, landed prices have, there would be a plateau lah.
How recent the build is. The build is brand new. It can be around 2,000 plus. But if it's older, like a lot of the landed houses right now in Singapore, because there's very few new ones, then it will be 1,007, 1,008. But it tracks new launch condos. If new launch condos, you're selling at 2004, right? So hey, if you're gonna spend 3 mil for a condo, why don't you just top it up with an extra 2 mil or 1 or 2 mil you can buy a landed. And landed is freehold, most of the landed houses in Singapore. So, but it might not be so new. So that's fine.
TDSR is a problem, isn't it? If you want to
go
for a $5 million loan, or you want to go for $5 million landed house versus a $3 million condo, TDSR would be hindering you from attaining that $5 million landed.
What do you think the TDSR would be for a $5 million home? How much does a couple have to make?
Monthly about 50, I think 50, 60.
50,000.
50, 60,000, right?
No, not too much.
Too much? No, let me think. So my friend, I mean, not naming names, my friend had this monthly about 70 plus.
70,000.
Yeah, their monthly income their monthly family income is about 70 plus combined.
It's still a lot of money.
It's a lot of money. Of course, they have good jobs regional directors of MNCs They bought a 5.35 comfortably. They bought a 5.35 comfortably after selling away their EC. The EC made easily
B-Tang.
Oh my gosh. B-Tang, more than $500,000. Just in a span of 8 years?
8 years. Okay.
3 years to construct and 5 years to stay, right? B-Tang. That's the right way. That's the way to go, right? Tap. Step up. 5.35. Today the house worth 6.5.
6.5 mil.
Yeah.
For the
Serangoon
landed.
Garden, semi-D. Yeah, Serangoon Garden, semi-D. Semi-D corner, semi-D.
What was the land size?
3,200 plus, I think.
Wow.
I think,
So so it's close to almost 2,000 for Serangoon Gardens.
That's right. That's right. Reasonable lah, reasonable. Yeah. The structure is only about less than 10 years, if I'm not wrong.
And they get to go and eat chom chom every day.
Oh yeah, walkable distance, yeah.
For landed prices going up so much, especially during COVID and just after COVID, was because Singapore is a land scarce and they're not really seeing any new ones. No more freeholds. So the supply is CEO, so it's very rare. It's not as one. It's not as a lot as it was in the past. So that's the reason why.
Yeah,
and it will continue to grow as well.
Yeah. And as you already know, Serangoon Gardens is the biggest landed cluster estate in Singapore. So the more transactions there are, then progressively you can.
Yeah, and it's also quite central. So it's unfortunately it's central to CTE.
Yeah, that's right.
Causing a little bit more traffic jam on that, but still nonetheless a good area to live in.
Yeah.
And prices are creeping up very, very quickly. Like you said, there's a lot of demand for it.
Yes.
There's always a lot of demand for. In fact, landed for even more outskirt areas like District 28, like Yio Chu Kang. Also, we saw a fairly large increase in that. The prices kept creeping up, but this year was a little strange from the last 3 years. We actually saw price significantly coming down, at least 5-10%, in some areas, and owners were not trying to record high every month anymore. So they will be coming a little bit more like, hey, I need to be a little bit more down to earth. Cannot keep every month. Oh, my neighbor sells 6 million. That one 6.5. It was that was a little bit better.
Yeah. Agree.
So I think landed would be going that way. How about HDB? What do you think? What was the year like for HDB?
HDB, you see the top end of the price curve, right? Hitting new highs again and again and
The
again.
latest one was 1.3, 1.5.
1.5 something, right?
1.56 or something.
Yeah, somewhere there lah. Almost 1.6 already.
Siao,
Yeah. Just I don't know, is it poor financial planning or whatever lah? What do you think? You think people who buy 1.5 something HDB, is it
I think
matter of?
I think that sold will continue to grow in 2024. That's my take on it, especially the 5 rooms and the executives, because a lot of people that bought 15 months ago, with the new regulations, they said, hey, you can only sell your HDB, so you can only buy a 5-room HDB after you have sold your condo or your private property 15 months. And that's only if you're above 55.
That's right.
So if you're not above 55, then you can't. So these people will probably come in with a bit of vengeance, and they will be swallowing up all the other, swallowing up the possible units up in the market. That's my guess. I think there'll be a mad rush for it.
Yep, I think so too. I had a client who sold off their condo and then had to wait out the 15-month period. She sold off a condo not at the cooling measure announcement date, but 2 months before. So effectively, it's 13 months. She could have bought much earlier than December, which is October. Bought already. So, do you think this policy of 15 months is temporary or permanent?
Don't know.
It seems like it's a temporary measure, right? Just to quell the surge at that time. Too many people were trying to leverage, not leverage, take the opportunity to cash out their condo and then.
Let's just put it this way, if the numbers for HDB, for the $1 million HDB numbers, every other month we see record number $1 million HDB prices, keep going up.
Number of flats, number of flats.
Yeah, the number of the number of flats actually being sold over $1 million keep climbing, which it did this year.
Yes.
And the price keep climbing. This will not be 15 months. It will be 18 months, or they'll come out and say, I'm sorry, if you bought your condo before, you can't even, I don't know. That's my guess. It will go the other way. It won't be lifted, it will be added. So that's my guess.
Yeah.
Because the government says, no, we need the space for young people. You older than 55, you go
Yeah, correct.
Oh, y'all got no more family already, so you all stay in small room.
Yep,
We give you the 2-room flexi, you
Yep.
say that.
Yep.
All the big rooms give it to the young people.
Yeah, correct. So the question suddenly that came up into my mind, the elderly or the retirees, they sell off their condos, they take that $3 million or $2.5 million, right? Then allocate 1 million to buy the HDB flat. They still have a sizable amount of
If you
funds.
buy a 4-room, it's less than that. So
Yeah, right. They have a sizable amount of funds. It's a good 7 figures. What are they using it for? What do you think? Put in a bank, collect interest, or what? Or are they savvy enough to invest it well? Because they still have to use it for the next 20 or 30 years, right?
This is the biggest problem in my opinion with Singaporeans. I'm one of them. So this is the biggest problem with Singaporeans in my opinion. Singaporeans' financial literacy is not there. We have very few options of investing. The older folks in the 50s and the 60s are not savvy enough. Most people are not savvy enough to basically invest their own funds. Basically, they don't know how to invest. They have no financial literacy. And people who are in their 50s, 60s, most of them don't want to learn new skills. Or they find, I already cannot think, learning very slow for me, something along that line. Or they prefer, no lah, don't kacau me lah, I already stressed my whole life now. I want to relax, enjoy. So if you had $2 million you put that $2 million in a bank, you're in my opinion, in a huge ton of trouble. Because if you, let's just say if you're 62, you retire, you basically, assuming you live until 82, 85, and then you got like husband and wife, so you got $2 million cash. If you don't invest that wisely, if you leave that in the bank, you're so screwed. You are super duper screwed. Because you basically, if you, 2 million divided by, don't live so long, divided by 20 years, every year 100,000, more than enough. If you throw in a 4% inflation rate, which is, it's going to happen for the next 10 to 15 years. A 4% inflation rate is not going to go anywhere. That's another whole video. We can talk about why. 4%, your $2 million strings 4% every single year. $2 million in the bank is bad. It's a really, really bad idea. If you had $2 million, if it was up to me, I would put that in something that will at least match inflation. Because you put it in the bank, you're losing 3% a year. The bank gives you 1%, inflation is 3%. So your money goes down. You keep drawing down that you can't even keep up with inflation. If you were to buy a unit trust in Singapore, unit trust in Singapore is horrible. I don't know about your experience, but most of them don't really make money for you. They make very little, 2%, 3% at best. They slightly better than the unit trust. It's slightly better than bank interest. The best, in my opinion, is to have a diversified portfolio. I.e., put some of it in equities, in REITs. Basically, make sure that, for example, this is one of the things that I did for my client. One of my clients came in and he said, hey, I own one HDB and then I own one condo. What do you think we should do? I go, okay, give me your numbers. I gave them a spreadsheet, and then after they gave me the numbers, in terms of cash flow, in terms of what their current condo is, how much they owe, I spent 8 days and I came out with basically an Excel sheet and says, okay, this is what's going to happen. If you were to keep this thing in 20 years time, this is what you have. But if you were to sell your HDB and then you buy a condo, this is what you're going to have in 20 years. But if you were to do this, and if you were to sell your HDB and then you take this money and you go and buy, let's just say Sing Song REIT, this is the number you have in 20 years. Then I said, because you are 45 years old and you can use the power of leveraging to make more money, the best number is actually to go and sell a HDB and then go buy a condo, because the condo, worst case scenario, is that it will track inflation. That's the worst case scenario. So but again, not every condo would work with the formula. You need to properly select one. And when it came to the HDB part, I said, look, HDB, the prices, not everything will hit 1/1,000,000, and the chance of you hitting 1/1,000,000 is not the statistics. The numbers are against it, because if you look at numbers like, for example, in Amokyo, you look at numbers, even Bishana very expensive. No, you can find really good deals like four bedrooms who are that still cost 600,000-700,000. So they don't really track inflation that well. So when you do the math, at the end of the day, you it's a really bad idea for you to keep the money in the bank. You have to find a way to educate yourself, to get some financial literacy, to put this number into an instrument that helps you make money. Worst case scenario is to keep up with inflation. Because even if you retired with 1 mil today, we spoke at lunch, if you retire with 1 mil today at the age of 62, husband and wife confirm not enough money to last for the next 25 years.
Yep.
And you're absolutely right. You're one illness away from very, very bad shape. Assuming you have no illness, you still don't have enough money. So that's the downside of that. If you, in terms of cash, whatever you think you have, now that it's enough, it's not enough.
Make a wild guess. I'm also going to make a wild guess. How many percent of Singaporeans at the age of 62 now have $1 million?
Less than
Wild
10%.
10%, yeah, I agree.
Way less than 10%.
Yeah, 10% or less, cannot be more than 10%.
They have more than 1 million in terms of potential capital gains, i.e. more money. But in terms of, the house, being worth more than 1 mil, but in terms of pure cash, no. So what it means is that at least they have some capital to draw down on, i.e. their real estate. But if they don't have that, they're kind of screwed. But if they had that, and if they want to get rid of it and extract the capital from their house, as I say, in the early 70s, it's a huge thing. So in your 70s, you're basically saying that, I stay in Bishan, very comfortable for the last 30 years, 40 years of my life.
Yeah.
Now, in order for me to draw down the capital, and I cannot anyhow draw down, if I draw down from a 4-bedroom to a 3-bedroom, you don't draw a lot. You draw at the most 100, 200,000 at the most. And then if you were to draw down more significant amount, then you have to go to Niao Santan Difang. So now I have to live in Sembawang or Woodlands and something which I am not familiar with.
Yeah.
Then you go that's the only way for me to draw down the capital, let's say another 200,000. Then you go it's a complete change of lifestyle. I'm so used to going down to my kopi, kopitiam, see all the all the other uncle there, we all sit down and talk about the good old days and all that. But now I'm forced to do this, and you go walao eh. It's a major change, especially for somebody in their 70s. And I think you've seen some, I've seen some as well. In their 70s, they ran out of funds.
Yeah.
Over lunch, we spoke about, I met a listed company director, he and his wife, they were forced to sell their condo, and they're in their early 70s. And they basically ran out of funds. And it's a publicly listed, company director. He obviously made a good living, but even he had trouble, on the cash front. At 70, the only money he had left was basically stuck in the house, and he had to sell the condo, and then after that go buy a 5-room HDB flat. Of course, I think that was before the 15-month thing. And it was very sad to see him, one of the more successful people in our society, a company director, and then now he has to upheaval his entire lifestyle to live something, a separate one, a different one. So yeah, it was very painful, and then to see that the guy was with an agent who didn't give a rat's ass about them.
Exactly.
I shoot the guy, but.
Exactly. Now that you talk about it, right, I also just remembered I had this client in his 60s, same, CMO listed company, CMO listed company, had to sell off a condo in Hillview, moved to a 4-room flat in Bukit Batok. It happens to the best of us. Can you imagine how about the normal people, the common man out there who were not C-level people in listed companies? How are they faring today, right?
Yeah.
So it's just time bomb, right? Like you said in the last podcast.
And the problem here is this: the reason why this problem is now in our society is because the Singaporeans are just not financially literate. They don't know what to do with their funds. I mean, if you're in, for example, in a place like the US, where you put your retirement funds into a 401k, and 401k is basically managed by folks like BlackRock. Those guys have economies, just these companies, these fund, their AUM is ridiculous. It's
Trillions, right?
It's in the trillions. It's like 10 times our reserve or something, some ridiculous number. If I remember correctly, their AUM on their books is like 3 to 4 trillion. Our reserves was like 300 billion or something like that. So it's like more than 10 times our reserve, for an entire country. So they get really good deals to invest in. Yep. When they invest, they get very good returns, like 8%, 9%. Worst case scenario, the Dow Jones Industrial Index gives you an 8% return, which is enough to keep up with at least inflation. But in Singapore, we don't have that. We only got our equivalent is CPF. Our CPF gives you what, 2.5, 2.6%.
Yeah.
Manakau, oh yeah, then what, 40,000, 4%? Come on, seriously. The other side, it tracks the Dow Jones Industrial Index. At least you see the worst case scenario. You buy an index fund, you get over the last 16 years 8% return. Hey, 8% at least beats inflation, as far as today is concerned, right? So at least you can live off of that, right? When Singapore, we really need to do something about at least educating the older folks, the 50s to 60s, or give them at least a few more options, because they don't have a lot of options, and they're already at that point of time where they don't want to take risks with whatever they have. You see, I cannot go anyhow bomb this thing gone. Hey, what's he got? So you got a massive problem over here. Yep. I don't know how the government is going to solve it. No bloody idea.
Yep.
You retire today. Worst case scenario, 5 years ago, just before COVID, if you retired with $1 million in cash, confirm you'll run out of cash in less than 10 years. Correct? You yourself say, right? Not enough to live, right? If you were to die today, your insurance can only pay out 2 to 3 mil. How is it going to take care of your family?
Exactly.
Bokawan, confirm bokawan, not with today's prices, right?
Yep.
Where are we going to be in 10 years, in 20 years? It's more jialat. So the older folks, all those in the 60s, all those in the 70s, if they didn't plan for this, I really have no idea how they're going to plan the next thing. I really hope government finds a solution for them. Otherwise, the old people, 60s, 70s, are going to be a huge burden on the economy.
Yeah.
And as we grow in 2030, 1 out of every 4 will be above 65, as opposed to 2010, where there was 1 out of every 11 or 12 or something like that. So, 1 out of every 4 above 65, in 2030, that's a huge number.
Yeah.
That's a bloody big number.
Yeah.
Our aging society is very scary. And if you don't take care of them, or if they don't have the means to take care of themselves, we are so screwed. What do you think?
I think you rightly pointed out that it's a ticking time bomb, right? So I just thought to myself, is it time to tell all my friends who are staying in a HDB flat today to sell away their HDB flat and go to private? That is something like the easiest way to tell yourself to take care of your retirement, because so many of our clients today at 65 cash out, right? But this is one way to spend it correctly. But having the means or the avenue to cash out is already a bonus in itself, right? That's very important already. But holding on to your HDB until you are 65, that is, to me, not very healthy or not very smart, in my opinion. So that's why I also lose money, sold off my HDB, and I had to just go and put yourself in a position where it's growing faster than inflation. So dangerous. Yeah.
It's very scary. So I had a client a couple of months back. She's 62 years old. She's a teacher. She's about to retire in another 2 to 3 years. She came about a bit of money from an inheritance. So then she called me and said, "Hey, I can only buy a 4-room HDB right now, and I need to wait 15 months in order for me to buy a 5-room." I said to her, please, I beg you, can you consider looking at a condo, a freehold condo that has a space that you require, but not very new. And the worst case scenario, this condo should match the capital growth, or inflation rate in Singapore. That's the worst case scenario. And I told her, I said, chances are, unless you know what to do with your funds, this is a slightly safer way to go. And if you put your money in a bank, it's going to shrink every year. 2%. It's like, again, 4% inflation, 1% or 1 point. I don't know what the interest rate in the bank right now is, ridiculously low. You're losing 3% a year on your money. So unless you know what to do with your funds, maybe consider a condo. It says, God man, but now the condo was so small. I said, yeah, but that's for brand new launch. You don't do a brand new launch. You look at older condos. And I gave her a whole list, and she was like, oh, can. Then my other partner, who's a real estate agent, he says, but then 1.5 million can find. Can find. But she want very big. I said, yeah, can find, don't worry. He says, but don't worry. We show her first, then after that, if she wants in the areas that she wants, then maybe have to go up that number a little bit. Maybe 1.7, 1.8, confirm sure can find. I says, yeah, 1.7, 1.8, no problem, can find. Especially, she wants such a big, to house her extended family. I says, yeah, that one can find. This is okay lah, but we get her used to the idea of 1.5 first.
Yeah.
And after the 1.5, then she was like, oh, okay, yeah, it's not so bad. I think this is a better use of my money. Others, I let it sit in the bank, it's going to shrink. This one, worst case scenario, I've done my money over here. It should keep up with inflation. Numbers shows us, okay, then you just go to an older freehold condo. You go to older freehold condo, and the thing I like about older freehold condos is got squash courts. There's this earlier with squash courts. Don't ask me why, but the new ones confirm don't have.
Okay.
The old ones got one. You got your own squash court. You go inside, you smell the awful smell of sweat,
Rubber balls.
Yeah, and rubber balls, and that stale smell, because the last time it was mop was, I don't know how long ago, but at least the worst case scenario, it sits on very good assets. The plot size is usually quite big. There's a chance for it to be en bloc. There's a chance for it to be, there's so many pluses to it. It's just not new, but you can make it very livable for you.
Yeah.
And it's a much wiser investment. So while new launches keeps going up, this one confirm sure tag along. It will be a laggard.
Yeah.
It won't be at the foretip, but while new launch prices 99 year goes up, the freehold will continue to follow and tag.
Yeah.
So I told her, I says, please consider this. Really seriously, it's not a bad investment. And then she said, oh yeah. I said, unless you know what to do with your funds, then otherwise please consider this. Worst case scenario, you'll try inflation.
Yep. My friend also like to say that these two words. He uses this word called gap up. Gap up. So if you see the new launch prices slowly going up, the resale ones they don't follow immediately. They gap up slowly, lag behind by 1 or 2 years. Never mind, it's okay.
That's
it's
fine.
Okay.
That's
you're playing a long game, right? You're playing a long game. You're staying in there. You're enjoying the facilities, the smell of the squash court, while you slowly gap up with the new launch prices. That's it. Yeah, simple as that, right? This is the simplest way to make good use of your money, and not just keeping it in the bank and slowly seeing it getting smaller and smaller.
Agree. So, if we want to at least keep up with retiring with a decent amount of money, my take is, please get some financial literacy in your life. If you can't, get somebody who understands it. Yes, most real estate agents are not financially literate to be able to read numbers. They are very good at opening doors, and it's like, I will get the key and open the door and show you and tell you which facing it is, and they can maybe crunch the numbers for you. But at least go find someone who can at least crunch the numbers for you, or get your Sun Tzu or whatever, your grandchild or your son or somebody to crunch the numbers for you, because it's a very scary future, especially the next 10, 20 years of your life, especially if you're going to retire, and it's a huge problem. No bloody clue how the government's going to solve this. In 2000, right now we're already seeing on the ground so many old people running out of funds by the time they are 70 years old. It's going to get worse. It's going to be a huge problem. Massive problem.
I agree.
No idea I don't know what the government's going to do, seriously. and there will be a huge upheaval of a lot of people's lives. I don't think it's very fair. People who've worked their entire lives and then at 70 years old, how to invest in 2024? What is Edison's grand scheme of plan in terms of how would you invest in 2024? Let's do this for three different areas. If you are a first-time buyer, if you are buying to invest, and number three, if you want to upgrade, what would Edison do? I'm curious.
Okay. For a first-time buyer, depending on your income, I think.
How old are you for a first-time buyer?
I'm 40.
No, not now. I mean, if you're.
If I were a first-time buyer at maybe the age of 30 to 35, because this is when people start getting married, right? 30 to 35 nowadays. Yeah. I would say, depending on your level of income, if you can qualify for a BTO, I don't think I should stop you lah. BTO has always been proven to do well after the first 5 years. If not then you just buy a private property lah.
That's on condition if you have a significant other to buy a BTO with lah.
Correct.
Otherwise you have to wait until you're 35, right?
Yeah, and then if you are LGBT or then you also can't. The government don't allow you all to get a BTO yet. Yet. So go for a private lah. Okay. So first time buyers, I think that way. Okay. Then for investment.
No. What? So you would buy a BTO lah?
First time buyer, I would say if you can get a BTO, just get a
But
BTO.
can BTO make you money?
For the first 5 years, I still think there's opportunity for that. Yeah, but of course now there's this prime and the plus model, right? Prime and plus models have 10 years MOP. I would, from my perspective, I would say I would try to avoid that. I'll try to avoid the prime and plus model. This is again just personal opinion lah.
Yeah.
You want to buy it, go for it lah. You just have to stay there for 10 years. Yeah. With Singapore nowadays, a lot of us like to be more mobile lah, and got a little bit more mobility. For example, today you get a good job in the US, you get a good job in Australia. Then your 10-year MOP how? Right not? Then you cannot rent the whole house out, right? Yeah. So that's kind of like stifling us. We are global citizens nowadays. You travel to the US don't know how many times a year. So don't tie yourselves down. You got a good job, go and experience. Yeah, that's my take
It's
on
very
it.
new. Okay.
Yeah, I think so. Right? How about you?
If I'm young, if I'm 30, 35, depending on what my financial situation is right now, I would decide whether to buy a BTO or not. That would not be my first choice. My first choice would not be a BTO, because the problem here is BTO, especially if you're 30 years old, is this. It takes a few attempts for you to get a BTO, assuming it takes you 5-6 attempts for you to get a BTO. So every quarter you try. So let's just say on average you wait 2 years to finally get a BTO. After the first 2 years, you get one on an average, let's just say a year and a half, 18 months later, or 24 months, you finally get your choice. And then after that, you wait another 3 to 4 years for you to get your keys. And then after that, you wait another 5 years for your MOPs. So we're talking between the age of 30 to 40 years old. You're not going to be able to do anything in the real estate market, because if you do, you incur ABSD, and that doesn't make sense in terms of investing. So in today's world, to build wealth, especially between the ages of 30 and 40, I would try and avoid it like the plague, of BTO, because it doesn't make sense for you to build wealth. If anything, HDB is not meant for you to build wealth anymore, seriously. Unless you buy some place, like if you're so lucky to get, like Keppel is going to come up soon, and oh wow, Kyoto, man, I ballot straight away, I get that. Unless you get places like this. But understanding that if Keppel were to come out, it will be oversubscribed by 10-15 times at least.